I'm Gareth Ansell with Golf Business, and it's a pleasure to welcome into our studio here today Rayan Sleem, who is the Senior Executive Officer at independent wealth management firm, The Family Office.
Thank you.
Rayan, thank you so much for joining us in the
Thank you.
studio
Thank you
today.
for inviting me.
So, first of all, can you tell us what The Family Office is exactly, what it does?
The Family Office, in its essence, is a wealth management firm. The firm was established back in 2004 with a main goal in mind. How can we make the financial lives of our investors simpler to allow them to achieve their financial goals, whatever these goals might be? So that was our overarching mission that we started the firm with in 2004. Our journey started with a single client in 2004 that entrusted us with his hard-earned wealth. And that journey has grown over the past 2 decades, where today we have around 1,000 clients. Those could be individuals, those could be family offices that have entrusted us as well with their wealth to help them manage that wealth in areas that are applicable for them. On behalf of these investors, today we manage $2.5 billion of assets, and we are based in 7 major cities. So the main headquarters, it remains in Bahrain, but we have offices in Riyadh, in Kuwait. Of course, our office in the UAE is in Dubai, and then we have our investment teams that also sit in New York, Zurich, and Hong Kong. And one aspect that we're very, very proud of is that in each of those cities that our teams are based in, we are regulated by the main regulator there. So we're actually the only Middle Eastern firm here to be governed by these 7 different regulatory bodies, actually 8 if you include the Cayman Islands, where a lot of our funds are based in. So from these regulations, you also have the SEC in New York, you have FINMA in Zurich, 2 of the toughest regulators out there, which shows you the high level of standards that we abide by for our clients and for our investors.
Yeah, and that's obviously a very important aspect.
100%.
Because trust is a key component, right?
100%. 100%. Building that trust, building the relationship with these families. And we can talk shortly on some of these cases, but for several of our clients, we've helped them manage that wealth and structure it as it was being passed on from the first to the second, even to the third generation. So without having the foundation of that relationship, there's no way we could have done that in the success that the firm has been able to achieve.
And you've mentioned the scope of the family office.
Yes.
It's quite significant. And so obviously whether you're in Dubai, Riyadh, London, wherever you are in the world these days, the space that you're in, financial wealth management, is a competitive one, right?
Extremely, yes.
So what makes the family office stand out? What is your USP?
Look, one thing we always focus on whenever we are starting a new relationship, we always ask the investor, what is it that you are seeking? Okay, are you seeking to create wealth for you and your family, or are you seeking to preserve that wealth? What we believe in is that our investors, they come to us, they're already wealthy. So they have created wealth from their holding companies, from their businesses, from their real estate investments, from different sources. However, they have created that wealth for them, and this is where they know what to do best. They have the most added value there. Now that they've created wealth, okay, now the next part of it is how can I preserve that wealth, and how can I make it grow for my next generation or for my financial goals that I might have. Those are 2 completely different aspects, and you shouldn't go for a wealth manager like ourselves if you're in the business of creating wealth, because we're not the right partner for you. Vice versa, if you've created your wealth and you want to have that peace of mind that your wealth is being well taken care of, then we are the perfect partner for you. And I'll talk more as to why. But what sets us apart is really, I would say, One is approaching each relationship from a unique perspective. So I mentioned that we have 1,000 investors. Each portfolio of these 1,000 relationships that we have is completely different from the other because our starting point is always from a financial goal aspect. I can sit with you today, Gareth, and we can say, okay, what is your financial goal? Okay, are you aiming to retire in a couple of years? Are you aiming to enhance the income that you get from your assets? Are you aiming to set up a portfolio for your kids or different aspects? Based on that, we would build for you a tailor-made portfolio that fits exactly what you are looking for. That's on one side. The flip side, which is something that I truly believe sets us apart from not only local competition but also from a global perspective, is our digital tools. Because when it comes to wealth management, when it comes to these types of investments, you as an investor have every right to know every single detail of your portfolio. Where is it invested? How is it performing? What is the outlook? What are the upcoming events that might happen? And we've invested heavily in our digital infrastructure that allows us today to provide these highest levels of transparency to every investor, where on your app, on your phone, on your laptop, you can literally access every piece of information on your portfolio on the go. You don't even have to call someone. You don't have to ask for any information. Everything is provided there in a well-designed manner.
I think you mentioned around the why, which I want to also dive into.
Yeah.
In terms of a little bit more around how you take some of your clients' wealth, and obviously there's a big expectation from their end to grow it, right?
Yes.
So why and how do you do that?
So what we do is we like to follow what you call an endowment approach, which is we take a look at who are the smartest investors out there. These investors that have been investing successfully for multiple generations. And if you take a look today, you have different examples. Two of them is you have the Harvard Endowment and you have the Yale Endowment. These two of the oldest and most prestigious universities out there, they have their endowments that basically is the assets of the university that allows them to spend on their projects. Hire faculty, expand, build new schools, all of these different aspects. What they adopt there, if you look at what they do, and all of this information is public information, so you can easily access that, is they adopt a very disciplined approach to their assets. Whether we are in a very positive year or we are in a recession, the amount of money that they can spend in any given year is defined from a very simple formula. They can't exceed it, they can't overspend, they can't underspend. It's a clear formula that gives them the flexibility in knowing how much they can spend. So having that a disciplined approach allows them to know how much I can invest and then where I should be investing. And then once I identify those areas of investment opportunities, finding out who are the top managers that can help me do that. It's very tough for a manager to be the best in everything. Okay, so our business model is to, from one side, adopt that endowment model. Okay, from the other side, identify who those top managers are, so that we partner with them and then offer their solutions in a well-packaged design to our investors. So this is why the starting point, as we said, with every relationship, is to really sit with that investor, understand what is it that they're looking for. What are their investment constraints? What are their investment objectives? What are they aiming to do? Do they have any specific considerations that we have to take into account? Based on all of this input, we will build for them an investment statement and a portfolio that is well designed into their needs. This portfolio, what we rely on is one, international investments. So I would say roughly all of what we do falls in the US, European, or Asian markets.
Right.
Okay. And the other layer to it is that it focuses on private markets.
Right.
Private markets, that is more like private equity, real estate, private credit. These are the types of opportunities where the returns are higher, and the opportunity set are much wider than what you get on the public side.
Okay, because I want to dive more into the private market
Yeah.
space, because that's a very interesting topic, isn't it? I think, obviously, as you've spoken, and you've taken a lot of inspiration from endowments. That's publicly available knowledge to a
Yes.
certain extent. The the private markets is a different ball game,
100%.
right? So how do you navigate that for clients, and how do you identify the right private markets opportunities?
Let's say investors in general, they have a choice today to invest. Either you can go the public market path, which is more and more becoming easily accessible for everyone. You can buy the stock of a single company for very low minimums. Let's say so. The public market path is becoming easily accessible. Private market path historically was not an area that was accessible for individual investors. It was typically reserved for the sovereign wealth funds or for the ultra high net worth families. These are the families that have the capacity to invest, let's say, 50 million, 100 million tickets in a single fund. The reason for that is that the private market players, first of all, the top managers have been consistently the best performing managers over the previous years. So one of the differences between private versus public is that in private markets, the discrepancy between a best performing manager, an average, and a bottom performing manager is huge. So this is why getting access to these top managers is very important. And because these managers know that, they have the upper hand. Let's say when they go to fundraise for their funds, they can say, okay, I'm only willing to accept tickets of minimum $50 million or 100 million or 30 million. So that limits a lot the investor base that they can access. So what we do is we identify these top managers. We find out who are the best in class managers when it comes to these strategies. Within those, who are their best performing teams as well. And then we establish a partnership with those teams so that we are relying on our investor base, okay? And then we go and negotiate with them as an institution. So I'm not going from an individual perspective and I'm saying I'm giving you a 500,000 ticket or 1 million ticket or such. I'm going as the family office negotiating a larger ticket into those transactions because I do have the investor base that allows me to do that.
Right. So that helps you open the door
Exactly.
to a lot of these fund managers.
Exactly. But to your point as well is that it's not easy. Like there's a very long and a due diligence process that has to be done when it comes to those investments. Because at the end of the day, you're buying a business. Okay.
Yeah.
So if we're talking the private equity path, you're buying a business. So you need to assess the financials of that business. You need to have the right assumptions when it comes to the growth projections of this business. You need to sit with the management to understand the challenges, their competitors, all of these different aspects. And in today's age where you have an additional AI element, you might not know which business between one night and the other might completely change because of an AI aspect. So having that right insight, okay, takes a lot of skills. And the skills that are acquired by these top managers, they have been doing that for the past 30, 40 years. And those are who we typically partner with.
So would that then classify as what I guess fund managers and investors would call the alpha?
Exactly. In a way, and if you want, the alpha is the extra return that you can generate by the skill of that manager, and that's what we always aim to achieve for our investors. So every investor today, let's say, and that's one of the misconceptions, not only here, but from a global perspective when you talk with individual investors, is that if I offer an investor today one investment that is paying out, let's say, 8% every year, and another investment that is paying out 15% every year, if you give that choice to investors, and a lot of the times investors might go to the 15 because it's a bigger number, it's a shinier number. What we always say is focus on the right R. The right R, you always have the return and you have the risk element. You need to focus on the risk element because what you aim to achieve is a better risk-adjusted return and not a higher return.
So that brings me to the next topic, which is building on what you just mentioned, which is technology and AI.
Yes.
How is AI impacting the family office and, the investment decisions that you're making?
I'll speak, first of all, from an operational perspective. AI has been a huge theme that we've been investing heavily on over the past 2 years. For us as a firm, I say we had two major inflection points. The first inflection point happened during COVID, actually, where we took advantage that COVID happened, and we invested heavily in our digital infrastructure. So during that time, we became a digital-first company. Digital first meaning that we fully digitized all of the processes that we have. So if I'm in a meeting, I don't take meeting notes on a paper. It's all transcribed. You have the meeting notes directly. The sharing of knowledge, the interactions, all of these are being digitized. The process of capturing an investor's goals, objectives, risk returns, all of these are all digitized. So during COVID, we really evolved to becoming a digital-first company. The second inflection point happened last year, which is we have the digital data. We have the information on every single aspect of the business. How can you add an AI layer on that to extract additional insights, knowledge, make the processes more efficient, all of these aspects. So this is an area that we've been investing heavily on over the past year or so, I would say, where we've eliminated all the manual processes that happen. If you take an investment committee memo, which is anytime we're seeing an investment deal, okay, the investment team has to analyze that deal, extract the right information, summarize it, present it to the investment committee for them to approve. Either I like this deal, let's go ahead, or not. This process used to take us 2 weeks, okay, let's say. Now we've cut that time by 75% because you have the AI tools that are able to get you 75% of the way. Right. And then you have a team that is the overlay on top of that to make sure that all the information is there. You push the content of it. You add your insights. You add your assumptions, your recommendations, so that it gets you there. Apply that to every single department that we have: finance, operations, us as relationship managers. Today, I'm doing, let's say, 15 calls every single day. Okay. Our human brain has a certain capacity in terms of how much you can memorize the names, the notes, the interactions that we have. With AI now, it's allowing me to cover more clients with the same amount of effort that I'm having.
And with AI, are you using your own LLMs or?
At the family office, we've actually established a Fintech Lab. So we're not simply a wealth management firm. We do have a huge fintech lab that allows us to build these tools, experiment, see what areas we can keep advancing on, so that our ultimate goal is how can we make the experience of our clients the best way possible.
Can you tell me more about the Fintech Lab in terms of how many people you've got on it, for example?
Look, I'll give you an example.
Yeah.
2 years back, actually more, 3 years back, we did a survey to our investors. We asked them, what are some of the challenges that you are facing? One of the highest challenge that was consistent among the vast majority of our investors was that I have different portfolios. Okay, I don't know what's happening at my overall wealth level. I'm invested with 3 international banks, with you guys, with 2 local wealth managers. Every quarter, I get 5 different statements. I don't have time to look at them. I don't have time to aggregate them. I don't know what's happening at my overall wealth. And that is a huge challenge, because if you don't have the data to properly manage that, you're not able to make the right decisions. We took that challenge. From that, we developed a tool which is called All-in-One Plus. What that in essence does is it's the wealth aggregator tool. So it basically allows an investor to input all of the portfolios that they have on this single tool, on this a single platform, protected with the highest levels of security and privacy. It has its own data servers in Switzerland, has all of that regulatory protection, but it aggregates all of that wealth for that investor. And only that investor is able to access that information. But what it allows you to do is on your phone, you log in onto this app, you get to see all your portfolios as a single portfolio. And then you can slice and dice this information as you see fit, by geography, by sector, by manager, by currency. Having that information gives you basically the full flexibility to understand how your portfolio is behaving today. What are the areas of, let's say, gaps or sectors that you could be overly invested in, and then from there make the best informed decisions.
Really innovating in the space.
Exactly.
And thinking like a tech company in many ways.
Yes, true.
Right, so intergenerational wealth transfer. This is a massive topic because I think we're about to see one of the biggest shifts ever, right?
Yes.
We've got the baby boomers who are now retiring in droves or, passing on a lot of their wealth to the next generation. How important is this for the family office, and how do you approach this?
Yes.
Because it can be a sensitive topic within families itself.
Exactly.
Right?
Exactly. I'd say it's an important topic for the region, first of all, before being for the family office, because as you said, we're in that pivotal moment where you're seeing a lot of businesses and then wealth as well being transferred from the first to the second generation. And it's a very important aspect. If you take a look at international studies, and that's based on years of analysis, 90% of the time, when the wealth is passed to the third generation, it goes away. Okay, so you have the first generation, this is the person that established the business, grew it massively, and then came a time when they're passing on to the second generation. This is when 50% of the time that fails. And then having that second generation pass it on to the third generation, this is when 90% of the time that wealth fails. So if you now take a look around how many third or fourth generation wealth do you have in terms of families, they're not that many. Okay, so this is why it's a very important topic that should be addressed. And the best way to address it is really planning. Planning before an event happens. Planning so that whenever such an event happens, okay, you do have the right structure in place, you do have the right plan in place. More importantly, you do have alignment between the different family members involved, and they are well capable of handling that. So these are things that we help families with. And as a matter of fact, we are having a workshop with one of our investors that has put this plan in place. And now we're working with him and his family members so that they're all, let's say, well informed of this plan. They know how it will be activated, what are the mechanisms of it, what's required from them, what are the information or the knowledge that they need to have, which will also work with them over time to develop that for them. And it's basically, as you said, going back to that first point, having the right relationship and the trust in place so that they come to us when such an issue happens.
So do you then, as a metric, try to see how you can plan for the third generation? I mean, do you go that far?
Look, it all depends on the investor.
Yeah.
Okay. I can give you some examples where yes, they are from now planning to how can that business and that wealth and assets that they have created, how can it last for multiple generations? So having the right structure in mind to allow it to withstand all these kinds of challenges. Other investors have different goals. So it really depends on what everyone is dealing with. When it comes to the family office, our products and what we offer to investors is really applicable to anyone thinking about wealth management. How can I better manage the wealth that I have? And that wealth could vary in amount depending on each person, but the common denominators of managing it properly are the same. Whether you have 1 million or you have 100 million or 1 billion, the key principles are the same.
Interesting. Right. And so looking at this region, I mean, you've worked in different markets around the world. What would you say is the state of knowledge among people here when it comes to that intergenerational wealth transfer? Is it still something that's quite new? This part of the world is developing very quickly as well,
True.
right?
True. Overall, I'd say when it comes to the region, it's becoming more and more advanced, not only on this topic, but overall in terms of asset management and wealth management. We are seeing a lot of people being much more informed in terms of what are the options that they have, what are the options that they aim to have, even if it's not something that's unlocked, let's say, for them now. They understand what the benchmarks are doing, what the global competitors are offering, and want to always push that frontier that they have. So it's a topic that we are engaging more and more clients on, and these conversations are becoming tougher. I would say, because people know more about these aspects, and today, like let's say any topic, no matter how complex or how easy it is, with a single prompt on Chat GPT, you're gonna get a small summary or a very large summary depending on what you ask for, and that, in a way, I would say is like the first line of defense, where you're getting that basic information, and from there, how you flesh it out, that goes back to you. But information in today's age is becoming more accessible. You're hearing different news, be it on the positive or on the negative side of such events happening without proper planning, and the family members not knowing what to do or how to act, or in unfortunate cases as well, losing that family bond and family touch. So it goes back really to having two aspects: having the right plan and having the right discipline in implementing that plan.
So I think that's been a concurrent theme through this interview.
Yes.
The plan and the discipline, right?
Exactly, because look, it's really plan and a discipline, but also what I mentioned initially, in the sense of, do you want to create wealth or do you want to preserve wealth? Because a lot of people think that they're in one bucket, while deep down they're hoping for the other, and they might judge you for the other. As a wealth management firm, my goal is to protect your wealth. So if you're seeing my performance going up and down, if you're seeing markets falling 5% and my portfolio dropping 10%, it means I'm not doing my job in the right way, because it means that I'm taking more risk than what is necessary. Okay, so knowing, and it doesn't have to be this or that. It can always be, I compartmentalize my assets. So let's say 60% here, 40% here, or what we typically recommend investors. And I had this conversation with a client last week. His business is doing phenomenally well. And when the business is doing really well, the thought process comes as that, okay, now I need to keep investing more and more in my business. The conversation was, no, like, you've created your wealth, okay, which put you on this position now. You do what you do best, which is your business, and that is doing phenomenally well, and hopefully it will continue to do that. But take a 10%, take 5%, whatever that amount might be. Take that portion, invest it in safer investment, so that when you sleep at night, you have peace of mind that I have this portion which is stable, so that when things take a downturn, I do have that flexibility. I'm not forced to sell to cover any liabilities that I might have.
Right. So looking ahead at the next decade or so, and I guess that might even be a short period of time,
Yes.
in a way. Where do you see wealth management going, particularly in the GCC? What key trends are you seeing emerging there?
100% is more digital adoption. So today, this topic we've been investing in 5 years back. And the applications that we have, the tools that we provide our investors, I can very confidently say we're years ahead of global competitors when it comes to that front. Today, we're seeing a lot of competitors start to launch some of these tools. Uh, and that is going to expand more and more and more. So I'd say within the next years, if not today, any firm that really doesn't offer its investors the flexibility or the digital tools to interact with their portfolios, to get information easily, this business, I can confidently say, will be out of business within a couple of years. So investors are becoming much more informed, much more educated, and they have every right, which they are pushing on, to get every information that they need. Today, if you are a client of the family office, you log into the application and you can instantly generate a proposal, instantly download any portfolio statement going back since when you started the relationship with us, instantly get any portfolio analytics report that we do. If I'm offering you that service, and then you're dealing with another institution, and then you call your banker saying, can I have my portfolio statement? And they're like, okay, it's a Friday. Let me send it to you on Monday. Which one are you going to go with? So investors do have that choice. And anyone that is not really pushing on the digital aspect will be out of business.
Yeah, absolutely. One last message for you, for families and investors, whether they be in the UAE, the broader GCC, who are watching this interview right now. What would you say to them?
It's very, very important to put the right plan in place when it comes to your wealth. You've worked very hard to get to the stage of where you are today. Having the right plan and having the right partners that execute that plan in a well-disciplined and personalized manner is very important today. This plus much other services that we haven't touched upon, but we do offer a lot of these at the family office. We've been doing that for the past 2 decades in the region with teams from the region based in the region. So we know the region inside out. We understand it. We understand the challenges, the complexities that come with it. We've seen different kinds of stories. Over the past month, I've interacted with people that just sold their business and are looking to invest. I've interacted with people that have a plan to retire within the next couple of years. I've interacted with people that have retired and want a stable income stream. I've interacted with people that just set up a portfolio for their kids, plus multiple other cases. No matter what situation you are in, what goal you are in, we have dealt with that. And we have the right experience, the right reputation as well, which is something we are very, very keen on maintaining and growing. And we do have the right tools in place to allow you to achieve these plans.
Rayan Sleem, Senior Executive Officer at the Family Office. Thank you so much
for
joining us on the podcast today. It's been really interesting.
Thank you for your time.
Great.